Gaz, can you hear me? Who can hear me? Anybody? Can anybody hear me? Cool. All right, get some people in this stream. Let's see if we can get some people in here. We've got 10 people in here. Give it a few seconds. Thanks, Super. All right, we'll give them another 60 seconds, and then we're starting, guys. So here we go. I don't know why I couldn't. It took me forever just to start this stream, and I couldn't get the link for it. So. All right, guys. We'll go ahead and start here. So tonight's lesson is on divergence. So on the right-hand side, everybody, if you need to post a question, go ahead, post it. I can see it. So tonight we're talking about divergence. As traders, we're always trying to find an edge to our trading. We know that in the markets, without an edge, we will not make money. So we have to add an edge to our trading. So one of the things we often try to do is we try to take advantage of momentum, take advantage of the strength and direction of trends. So divergence and momentum trading gives us an edge, and it's all about raising our odds. If I can find divergence on a chart, I have higher probabilities, and because I have higher probabilities, I can invest with a reasonable certainty that I have a better chance than not to make money. So bear with me, guys. My first live seminar here. So essentially, when we have momentum in a stock and that momentum is slowing, we should pay close attention. Now, when you have slowing momentum, that does not always mean a reversal. However, we should always take note. So when we see a trend is slowing, that is noteworthy. Let's go ahead. Let's pull up. There's several types of divergence. Can everybody, is everybody still with me? Are we good? Okay. Just double checking. Okay, so here are the several types of divergence. I'm not much of a guy to really get hung up on names. I know, for example, an asymmetrical triangle, I often call a wedge. A wedge and an asymmetrical triangle, the exact same things to me. I don't really care. Names don't really matter. What matters is understanding the logic behind what's going on. And so what I'm saying here is, yes, there are different types of divergence. Does the name of divergence matter? Well, like what type it is? No, it does not. So here we have regular divergence, we got hidden divergence, and we got exaggerated divergence. Call them what you want. Call them what you want. But essentially, I pretty much always call them just a normal divergence. And you can see the different types here. For example, we have the price, and then we have an indicator, and they're opposites of each other. So maybe I should back this up, and I should show you what divergence is. When we have price and price is moving up, we can then look at our indicators. And if our indicators agree with the price action, I would say that the price and the indicators are in agreement. As simple as that, right? Now, however, if price is going up, but the indicators are going down, clearly the indicator is not in agreement with price. Thus, I would say that the indicator is diverging from the price action. That in and of itself is divergence. So you guys can see right here, this is an example of when the indicator agrees with the price action. Here's an example of when it does not agree. I hope most of you by now, I would assume, know what divergence is. So I'm not going to spend too much time on this. Let's go ahead and start getting to some examples. I've shown you the different types of divergence here, right? We have regular divergence where the price action is making lower lows. However, the indicator is making higher highs. We also have hidden divergence where the price is making higher highs, but the indicator is making lower lows. Exaggerated divergence, call it what you will. Essentially, price action is flat, but the indicators are doing something different. So we have it both for, there's two types. Essentially, we can have divergence at extreme lows and at extreme tops. Tonight, we're mainly going to focus on extreme lows. Why do I say extreme lows? Because more often than not, we are looking to buy things. We're not normally looking to always short things. The nature of trading, normally we're looking to long things. So we're not really going to be focusing too much on things like this, where we're at an all-time high. We're going to be mainly focusing on things where we are at an all-time low. Now I posted, it might not be there actually. I'll post some sources up later where you can go ahead and you can take a look at some articles that I posted here. But let's go ahead. Let's start with guppytraders.com. Now notice how here price action making a higher high. However, RSI is making a lower low. And what follows subsequent of that, we roll over. Now, what does this really suggest? This suggests that momentum, RSI is a measure of momentum, right? RSI is a measure of momentum. So when RSI is making a lower low, it shows that momentum is slowing. However, if you look at price action is making a new high. Now, when momentum is slowing, it can start to suggest that something is changing, right? I see momentum is slowing. I start to think, hang on, wait a minute. Maybe investor sentiment is starting to shift. And here in this case, investor sentiment was beginning to shift. The indicator no longer agreed with the price action. And what happened? We rolled over. Now, when we see divergence, it does not always mean there's going to be a reversal. Not always, but it is something to pay close attention to. So when I see divergence on a chart, I'm going to look for confirmation following the divergence. Is there confirmation suggesting that I should sell? It's all about boosting our odds when it comes to trading. So like I just said, we're going to always look for confirmation. Furthermore, I love to trade divergence when we are at support and when we are at resistance. And we're going to see some examples of that tonight. Now, divergence works best when the equity is in a uptrend or a downtrend. It has to be in a trend for it to be reliable. Let's look at an example where it is not in a trend and nothing really happens. For example, here they're using stochastics. Maybe I should zoom in on this. Here they're using stochastic oscillator and they're trying to look for essentially divergence. And there's constant divergence occurring here, but it really doesn't help you too much. Divergence works best when we are in a trend. Here's an example of when we see divergence using MACD, and then we just trade sideways. Not really what I'm looking to see whenever I trade divergence. When I look to trade divergence, I'm normally looking for a massive price swing. Here we see divergence and then we just trade sideways. So like I said earlier, divergence does not always mean it's going to reverse, but it does show that the trend is slowing. So I hope everybody's on the same page as to what divergence is. Again, price action diverging from the indicator is a classic example of what divergence is. I put together some examples for us here tonight. If anybody has any questions, go ahead and post them in the chat here. The mathematical side of divergence is definitely not my strongest suit, but we do have some pretty good examples here for tonight. So if nobody has any questions, I'm going to go ahead and continue with our examples. I can see, like I said, I can see the comments on YouTube, so go ahead and post them if you have questions. So the SPX right here, we are looking at the 2009 time frame. We are looking at the weekly chart, and we do have the logarithmic scale on. Notice here, we're making lower lows on price action. Price action is absolutely collapsing. People are selling, selling, selling. And we've been selling for quite a while, right? I mean, we just, from 1,500 all the way down to, 700, we more than halved our price action here. It's been very bearish for a very long time. Now, we've been in a trending market, right? This is a trending market. We know that divergence works in a trending market. If I start to see divergence in a trending market, I know that momentum is beginning to slow. Look what we begin to see here. I see RSI showing that momentum is beginning to slow. Does everybody see why I say that? Our price action is going lower. However, our divergence is going higher. The only way that can occur is if momentum is slowing. So here, I see that my RSI makes an all-time low. And then when price action makes a new all-time low, RSI is at a higher value. That in and of itself is divergence. Does everybody see what I mean there? I think it's pretty simple. I don't want to hang up, on this too much for those of you that are more experienced. Furthermore, we can also look at MACD. I see that MACD is actually making a higher high here. We also see the MACD histogram is also making a higher high. So you can spot divergence with several different indicators. I'm going to talk about 3 of them tonight. I'm going to talk about RSI, MACD, as well as the MACD histogram, as well as stochastics. I normally watch for divergence when I'm looking at RSI. So the takeaway from this chart, everybody, is price action is making a lower low, RSI is making a high, histogram is making a high, and MACD is also making a high compared to past values. And if I were to buy after this massive green candle right here, if I were to buy at the top of this, bing bada boom, what do you know? I get in massive gains. Pretty simple, right? The idea is wait for a nice bullish green candle. You see divergence, then you wait for a nice bullish green candle. You get in on the next candle and you ride it higher. As simple as that. That's a trading strategy for you right then and there. Also notice back here, back in 2007, we begin to see divergence at all-time highs. I apologize. I'm trying to make these lines straight, but it's kind of difficult. You can see that we make a slightly newer all-time high right here. But the RSI is making a lower level. Looking at some questions here. Caleb, yes, you can see divergence on all time frames. Right now we're looking at the weekly, but we are going to show you some examples of divergence on the 5-minute. We're also going to show you some, I don't have any examples of it on the 1 hour, but yes, you can use this for day trading. You can use this for, weekly swing trades. Yes, it's on all time frames. I'll answer the rest of these 2 questions later. Yeah. Okay, guys, just hold on to your questions there. So essentially in 2007, when the market absolutely collapsed, we can see we made a new all-time high right here, but RSI was making a lower low. MACD was also making a lower low. And what do you know? We broke through the, I have the 20 MA pulled up on here, and we also have the 50 MA. So we broke through the 50 MA right here. We later broke through the 200 MA right there, and then we moved lower. Okay, I'm going to go on to the next example here. Okay, SPX once again. This time we're looking at the daily. We are looking at 2010 right now. Let's pull up the screen drawing tools here. That is Windows W for all of you who are wondering how I'm doing that. So we see the price action is making lower lows right here. However, we can see right here, RSI is holding flat. Let's go ahead. Let's actually pull up our picture here. So we had said that this is, according to this diagram right here, this would be exaggerated divergence. How we're seeing the RSI remain flat despite price action making a lower low. I take that back. Well, nonetheless, essentially, price action is moving lower, but the indicator is holding flat. Clearly, the indicator is showing that the momentum on the indicator does not agree with the price action. So I would be curious. I would be questioning whether this is going to move higher. After this green candle right here, I may take a long position and we move higher. On a smaller time frame, you can see right here and right here, RSI is making a higher high. Price action is making a lower low, though, right? And then we move higher. You can also see the MACD histogram has a low right here, but then a higher low. So MACD histogram also does not agree with the price action, as well as the just normal MACD lines. Does everybody see what I'm seeing here? Does this example make sense? Again, SPX once again. You can see. Thanks for the feedbacks, guys. You guys can see for days, SPX has divergence all the time. I love to trade divergence, and this is an example of a trade that I would have taken without a question. Now, this trade is looking at the weekly once again. We still have the logarithmic scale on. I always chart and log. We can see we're making lower lows here on the SPX, right? Lower lows. This is the 200 EMA and 200 SMA that we're coming to test. And you can see the RSI begins to make higher highs. Well, higher lows, sorry. Higher lows on the RSI, but the price action is making lower lows. So clearly, the RSI is in disagreement with price action. By definition, that is divergence. Now, you can see, on the other hand here, MACD is not in divergence. MACD is agreeing with what we're seeing, which is kind of interesting. You know, that's kind of why I wanted to include this example. You know, for example, here, the RSI is showing that we have divergence on the weekly. MACD does not confirm. However, the MACD histogram slightly confirms. So this is an example of when all indicators aren't lining up, but you may still be able to trade this. For example, I see that we're approaching the 200 SMA and EMA. I know that this acts as a form of support, right? Any good trader knows that the 200 SMA and EMA acts as a form of support. You could try to draw support and resistance. I don't have a straight line. Maybe I can do this. Nope, doesn't work. I'll just get rid of that. You could try to draw some form of support and resistance right here if you can find it, something like that. And we know that divergence works even better when we are at forms of support and resistance. We also know that the EMA and SMA acts as a form of a dynamic support and resistance. So trading this divergence along with that support gives us better odds, right? As traders, we're always looking for better odds. We're always looking to increase our probability of being correct. And here, while the MACD may not agree, the RSI shows divergence, the price action shows divergence. I hope everybody understands this. Without getting too much feedback, it's kind of difficult to tell if I'm making too much sense. I'm going to go ahead and move on over here to Berkshire Hathaway. So we just finished up 3 examples of the SPX. Now we're looking at Berkshire Hathaway, very similar, right? Very similar. And I hope you guys can spot this right away. How easy is this? We can see that price is going lower. RSI is going higher. RSI is in disagreement with the price action. MACD, same thing. I can see MACD is making higher highs or higher lows, sorry. But again, price action is making lower lows. So by definition, this is divergence. I'm reading the comments here. But MACD and RSI trend lines are similar, hence the upward trends. The jumping toad, I don't quite follow your question. If RSI and MACD both agree with price action, then all is good in the world. There's no questions to be had. When price action and the indicators do not agree, that's when divergence occurs, right? We'll go back to just our textbook example here. Our textbook example shows right here, price action going higher, indicator going higher. This would be an agreement. This would not be divergence. However, when the price action goes higher, but the indicators are going lower, this in and of itself would be divergence. Why? Because the price action does not agree with the indicator. The indicator does not agree with the price action. I hope I am understanding your question. Pull up OBVs. OBV is stock, Duncan. Yeah, D2 is OBV. I don't follow. You tell me to pull up on balance volume? Does everybody see why this was an example of divergence, though? We see price is making a lower low, RSI making a higher high. Over here, price action is making a higher high, but RSI is making a lower low. And what do you know? We get a nice small sell-off. And I'll go ahead and do a D2 asked here and pull up on balance volume here in a second. But, you know, why this only generate this signal right here only generated at max, if you were to trade it absolutely perfectly, 2.5%, that's still, you know, that's still money to be had. Over here generated, if you were to get in after this green candle right here, you would have gotten in on 4.6%. So this isn't groundbreaking returns on this example. However, it does work and it gives us an edge to our trading. So on balance volume, D2. I have personally never really used on balance volume. It shows the shit. Huh. All right, D2. We'll have to talk about that later. I'm not following what you're saying. Let's go back to our other examples. Okay, here. Matt, I see what you're saying. OBV. I personally never used it, so maybe we'll take a look at that later. Interesting. Okay, so here we see the price action is going lower. This is on Shulenburg. This is on 5 minutes. Duncan, you were asking if we can use divergence on smaller time frames. Yes, we can. Here we're using it on the 5 minute. And look at this. On the 5 minute, let's see. What kind of returns does this generate? Not much. I figured it would have generated more. But it does give us a move. You know, if you were scalping this, you know, so be it. You get in. Again, histogram does not agree with price action. RSI does not agree with price action. MACD does not agree with price action. Yeah, see, I know D2 would totally play this. What we're seeing, divergence is great for playing options. For example, if you're looking to swing an option real quick, scalp an option, if you see divergence, I would absolutely take that play. Good point, D2. Ian, okay, I'll look at Silent Dawn. I'll look at that one in a little bit. So here we see price action. This is actually a trade that I took, and we're looking at this right here. I'm going to comment on this in just a minute. I actually took this trade. Why did I take this trade? I saw divergence, price action making lower lows, RSI making higher lows, histogram disagrees with price action, and MACD disagrees with price action. I took this trade on this candle right here, and I brought myself in a nice quick return. Look at this. I brought in over 12% on this trade. Over 12% trading something so simple. Look, right now, oh gosh. right here, we're bouncing off the 200 SMA and EMA. I see this nice candle right here. I take this entry because of the divergence, and then we go higher. Right? How simple is that? Any questions on that one? Tatoski, I don't know if that's how you pronounce your name. I have never used volume-weighted MACD. I'm not sure. I normally trade this either off of the RSI or stochastics. Yep, Duncan, you're right. D2. Does RSI follow price action? Yes, by nature. If you look at the calculations of how RSI is calculated, yes, RSI is supposed to follow price action. The only way it does not follow price action, let's look at my notes here. I'll pull these bad boys up. Okay, we're looking at this section right here, guys. When you see the price making a higher high during a bullish trend, but your RSI makes a lower low, aka divergence, it means that the most recent bullish candles were not as strong as the previous price action. And because of that, the trend is losing momentum. That is the only way RSI divergence can occur. So it goes back to the math of how this stuff is calculated. Like I said, I'm not too strong on the math side of it, but that would be how it occurs. So going back over here, okay, yep. Any other questions? Yep. Yeah, notice what D2 is saying. For every $1 move in the SPX, you can get about $100 in options. So if you play divergence on this and you get a $3, $4 move, you can expect some massive returns on your option plays just using divergence. So JD, this is an example of a trade that I took. Oops. Now, if we come over here, this is an example of divergence that I would not take. Sure, we see divergence. We see price action making a higher high. RSI is making a lower low. Why do I say that this is wrong? RSI often makes lower lows when it's making new highs. Whenever you have RSI above 70, above the 70 line, price action will often continue to make higher highs, right? Same thing here. We saw divergence here, but we were mainly seeing divergence over 70. It's very common to see RSI making lower lows when it's above 70, but continue to make higher highs. That's just the fact of the nature. I'm going to post a playlist for YouTube later that discusses only divergence on RSI above the 70 level, and I think it will really help you guys. I would say this is wrong. Why is this wrong? Because price action is making a higher high, but RSI is making lower lows above 70. Above 70, I always say that there is strong strength with RSI. A lot of people say that RSI is oversold over 70. I always say no, RSI is a measure of sentiment, so it's natural to see divergence above 70. Sure, we move lower here for a candle or two, but for the most part, we move higher. That's why I say this is wrong. We're going to see some more examples of this moving forward. Macys. A lot of you guys traded Macys recently. You guys see this? How easy it is. We are looking at the 1 week chart here. I see RSI divergence. Price action going lower. RSI disagrees. MACD disagrees. So I buy at the next candle that's green. So I would buy on this candle right here. And we move higher. What's the percentage return on this? And this is on the weekly. So maybe you were able to time your entry better on the daily. This is over a 30% return right there. 30% return on something as simple as divergence. Let's go ahead. Let's take a look at Twitter. Again, I am using log scale. That's why this channel works. If you don't use log scale, you would never see this channel. That's why I'm always telling people to freaking use the log scale. So here, RSI making price action making lower lows. RSI making higher lows. It's disagreeing with price action. Same thing with MACD, and I buy. I can also say that this has better odds of succeeding. Why? Because this channel is acting as support. So I'm also buying at support along with divergence. I have the odds in my favor for this to work out. If I buy right here, I can lock in 62% of gains just by using, one, this log channel as support, and then two, divergence. Hope that one makes sense. This is a great trade right here. Great trade. I'm using support and I'm also using divergence. Over here, let's look at some sell signals. We're looking at the 3-day time frame on Delta Airlines. This one's kind of interesting. Earlier, I told you that RSI above 70 often shows divergence, but we often don't trade it. Here's a perfect example of where RSI is not above 70 and we can reliably trade it. RSI gets rejected to move higher here at 61.8, Fibonacci number, right? Fibonacci number. We get rejected at 61.8 while price action is flat and I move sharply lower. Does that make sense? I'm flat on the price action, so I would suspect my RSI to also be flat. However, my RSI is making lower highs. That shows divergence in and of itself. Look, the MACD also shows divergence. MACD is rolling over. We're right here. MACD's completely rolling over. RSI is completely rolled over. That's divergence. How much does that save me? I get out before a 14% rollover on price. That's outstanding. That's outstanding. Now, let's say that so from this high to this high, price action is making a higher high. Again, RSI is making a lower low. RSI gets rejected at the 70 level, and we know anything above 70 has immense strength behind it. At least that's my motto. So RSI gets rejected here at 70. It's not able to move above 70. Price action is making a higher high. RSI is making a lower high, as is MACD. Does that make sense? I hope that makes sense. This one's pretty good. This is JNUG. We see hidden divergence here in JNUG. Price action is making a lower high. However, RSI is making a higher high. If we go back to this, hidden divergence right here, hidden divergence, price action making a lower low, making a lower high, while the indicator is making a higher high. That's what we see here. Pretty straightforward. So at the close of maybe this candle right here, maybe I short this or I cut my long position. I hope you wouldn't be long in something that's just collapsing like this. Maybe I short this right here, and what are my gains? Man, look at that. 20% gain if you were to time this perfectly, just using RSI. We can also see MACD looks like it's also disagreeing. MACD histogram also seems to disagree with the price action. Now over here, I note that there is no trend over here. And because there is no trend, we do not listen. Any divergence you might see, I'm not going to listen to it. Why? Because we know that we have to have a trending market in order to use divergence. Does everybody remember me saying that? MACD works best in a trending market. MACD shows us when momentum is slowing. There is no momentum in a sideways market. Thus, I cannot use divergence. Does that make sense? This is a great trade. Absolutely great trade right here. Not only do the fundamentals support this going higher, ESV is trading below its liquidation value. It's trading below half of its liquidation value. If you were to sell, it's a offshore driller. If you were to sell ESV for just all of its shippers scrap metal alone, it is worth more than what it's trading at right now. So it had fundamentals backing this play up behind it. We see RSI, we see price action making a lower low, RSI making a higher low, MACD confirming that as well. That's divergence. You know, maybe at the end of this candle right here, I go long. What are my gains? 38%. 38% from such a simple pattern. Your children could recognize this pattern. Does this make sense, guys? This is my last example that I have. Any questions you guys have, go ahead. Feel free to leave them. But this is essentially the presentation. I hope this made sense today. I'll go ahead. I'll upload some links for you guys on divergence. But if nobody has, I'll give you guys 2-3 minutes. If nobody has any questions, we'll go ahead. We'll close this presentation down. Perfect. I mean, divergence alone got you in at the absolute bottom here in the SPX. And then we move higher. So this definitely has real world applications. I hope all of you got something from this today. Actually, bonus rounds for those of you who are still here. Let's actually pull this up. I might have lost some of you for calling this off too quickly, but you can use what I just taught you with stochastics as well. I realize this isn't the best screenshot in the world, but notice here, we're moving lower in a channel. We know channels tend to break out of a channel in two ways. Channels break out either via a double bottom or divergence. That's normally how they break out. Here, we break out not with the double bottom, we break out with divergence. You can see stochastics set to the 931 setting, and I think I only have, I don't know which line this is that I have shown here, but we say divergence in the stochastics, right? Let's pull up the drawing tool here. We're going lower. Stochastics is going higher. This point of contact, and then this point of contact. I would have gone long after this nice green bar right here. And then we go bada boom, massive returns from 64 all the way up to 73. Same thing here. Price action making a lower low, stochastics making a higher low. The stochastics does not agree, and we move higher. Does that make sense, guys? Again, the exact same settings in 931. We only have one of the lines being displayed. But it makes sense, right? Again, if the indicators do not agree with the price action, clearly the momentum is beginning to shift. And while momentum beginning to while that signal does not always mean it is going to reverse, because we do know we can see divergence and then trade sideways. However, I'd be watching this very closely. Here, I'd watch it very closely. Maybe I go long after these 3 green candles right here, and bing about a boom. What do you know? From 47 up to 50. There we go. Small gains, reliable gains, though, right? It's all about giving us an edge. Here is a form of, I believe this is hidden divergence. This is a massive move all the way from 61 to 72. This is great, right? This is great. Price action making a higher high, stochastics making a lower low. This is a form of divergence. It's called hidden divergence. So if I trade this, maybe I enter in after this massive green candle right here, and I ride this higher from 61 to 72. Here are some examples of trades that TJ has taken. For those of you who know TJ, I'll let you guys absorb this one in. Right, we're making higher highs. RSI is making lower lows. And we roll over. This is what I wanted to talk about. Last one, this is about all I got for you guys. Right here, let me go into the screen sketch. Right here, there's news that comes out. Dean's Food absolutely collapses from 15 down to 12. People lose a lot of money. You see the divergence kind of occurs here, right? So maybe you try to trade this. I would tell you that this is incorrect. Maybe you can trade this. I'm not 100% positive. I won't lie to you. I'm not 100% positive, but there's clearly a fundamental change that occurs right there. Because of this fundamental change, I would say that the indicator should be completely reset and you should disregard anything that you see from the indicator for the next couple of days. Meaning this action that we see right here, I would consider invalid. Why? Because it drops down to this level based off of this collapse alone. So essentially your last takeaway from this seminar is be very careful when you see gaps in the chart. Trading divergence based off of gaps in charts is probably a big no-no. I won't claim to be an expert. I'm just hosting this seminar because I do use divergence in my trading, but I hope that makes sense. Don't trade divergence that you see that is made off of gaps in the chart. All right, guys. Yes, notice what Bloom is saying there. There are 4 different types of gaps. And we'll discuss that in another class. I hope this was helpful for you guys. I know I rambled on quite a bit. If you have questions, feel free to ask. I'll post this up on YouTube. I'll probably re-record this entire lesson down to something that's more like 10 minutes long versus 40 minutes long. But I hope this was helpful. Thank you, D2. If anybody has any questions, I'll give you another minute or two to ask them. If not, I'll close this session off. Thanks, guys. Evan, yes, 1 minute chart divergence does exist. You can trade it. It is reliable. I would recommend you to trade it. Obviously, back test anything that you try to trade before you trade it. So I don't have any 1 minute chart examples for you. I know me and TJ ourselves have talked about it. Yes, you can trade 1 minute divergence. It does work. I do recommend it. All right, guys. Last couple seconds here. Any other questions? All right, guys. Sounds good. Any of you who want to be in the chat, feel free to join. There was a link posted up above a little bit for United Traders that you guys can follow. And yeah, definitely Bloom. I hear you. All right, guys. Take care.